Welcome to the Holistic Accountant Podcast. This is where we cut through conventional accounting and show you how a genuinely holistic approach drives better after-tax outcomes. It's not about ticking boxes or churning out tax returns. It's about strategic advice that builds lasting wealth. If you find this episode valuable, leave a rating and share it with someone who will benefit. Okay, today, I would like to talk about key person risk within your business. So that's probably you if you're listening to this podcast, particularly if you're the owner, the founder of the business, the person that makes all the decisions, the person that delivers the product or service, the person that thinks about it at 11 o'clock at night before they go to bed and lies awake in bed thinking about it when you want to sleep. And even when you wake up on a Sunday morning, you're probably thinking about it again. So if that's you, you're probably the key person in your business. And there's no better acid test than being absent from your business for a period of time. Whether that's a week or 4 weeks, whatever it might be, it is the perfect test of your systems, your internal systems, your processes, how well you've trained and hired individuals, really everything like that. If your business blows up just because you're not around, that's always going to be a problem, not only in terms of giving you a better work-life balance or at least some work-life balance, but also in terms of maximizing the business's value and also making sure you've built yourself a robust business as well, because at the end of the day, you want something that's going to thrive, even if you're not able to get out of bed and come to work that morning. So, Mina, let's talk about the reality check of being absent from a business. What breaks?
So when owners leave, the first cracks are rarely operational. They usually relate around authority-based. And the common sort of breakpoint around, for example, bank access. So like you might have a single signatory on the bank account. I know Stuart and I met a client back in, I think it was 2018 or 2019, who ran a $50 million business. And the only authority on the bank accounts was actually his wife. Now that made complete nonsense, because if there was a marital breakdown or if she was incapacitated for any reason, a business of that scale could not actually go on. So it's really important to sort of make sure that the appropriate people have the appropriate bank access. Then there's around sort of director duties that no one confident is able to say no or yes to decision making. There's no approvals or delegations around things such as pricing or hiring or contract sign off. So things around sort of supplier management and debtor management and so forth. And then there's a breakdown around sort of compliance. So things around BAS, payroll, super, tax deadlines. Generally without the owner, then these things tends to break down because there's that heavy reliance on the owner. So there's almost a sense of decision paralysis. The team waits for when you're back. Oh, okay, we'll just put it on the back burner, wait until the owner comes back and then they can deal with it. And then you're really just a bottleneck of your own business. You're the escalation point. And if anything was to happen to you, then your business can't go on. Then the business in itself is then distraught. So every one of these gaps that you identify when you're away is a red flag to lenders and buyers, because if there's a key person risk, then your buyer is actually going to discount that. And not only that, you get no freedom from your business. So it's really important to look out for these red flags and to put a system, person, or process in that place, so it's not an escalation point.
And talking about potential buyers is a really good thing to do, even if you're not thinking about selling your business. We've spoken about this before in this podcast, that it's really good to take a buyer's mindset towards your business, just because it makes a more robust business, often a more profitable business, a business that is less reliant on your effort on a daily basis. And so that's why I think it's a great lens to look through when considering what business improvements you can make. And of course, a buyer is going to pay for transferability, not for your effort. And really, dependence on a founder or owner is really the biggest kind of discount that will have an impact on what you could sell a business for. So, it'll show up in lower multiples, lower profit multiples, because, I'm not prepared to pay, say, 6 times profit if I don't know how well the business is going to run in the absence of that founder. Higher earnouts, an earnout means that the sales price is linked to the profitability of the business after you've sold it, and you've got to hang around and make sure that you can, squeeze those profits out so you can maximize your sale price, longer handover periods, these sorts of things. And remember, if the business is going to run as efficiently as when you're around, it's not really an asset, it's a job. And that's something that you need to work through. It might be okay, or you might be able to, work with that for the first 5 or 10 years. But trust me, after 20 or so years, it'll start to feel like more of a handbrake than, a lifetime solution. So sometimes a sabbatical, a planned sabbatical, is really the best way to kind of stress test some of these things. I mean, you can do it before you start that sabbatical, and it's obvious, I think, to most owners, where those sort of pressure points are. But having that sabbatical is really one of the best ways to make sure your operation systems are watertight.
So what a sabbatical actually looks like is like an operational audit of your business. So it's not time off necessarily, it's just a stress test to your business. So you treat it as if it being sort of like a 3 to 4 week period where you're not involved in your business. You're not checking in. You're basically just completely stepped away from your business, completely hands off. Obviously put your own sort of fail safes in place so that something does happen that you're still involved. But what it exposes is decision making bottlenecks, like I mentioned before, exposes any sort of weak middle management or management in general. It sort of identifies any sort of missing documentation or process that breaks down because there's no authority or delegation to provide clear clarity. And it identifies who your good managers are, who are the ones that can actually rise to the occasion. Now, obviously, like I mentioned before you step away from your business, you need to make sure that your absence is actually safe. So put multiple bank signatories as an example, put clear approval thresholds, who can do what, when and how, put documented delegations system in place, put solvency awareness with your leadership. What does that look in terms of solvencies around sort of your debtor and supplier management? When should things get paid? When should you be chasing up debts and all those kind of things? It isn't about abdicating responsibility, but it's sort of designing a process around continuity.
Sometimes as founders, we can be our own worst enemy. So sometimes I find a lot of owners are quite reluctant to hand over control. What happens if I'm not across this decision? What happens if a customer gets upset? What happens if a mistake gets made? And they're all relevant and realistic concerns, of course. But the reality is that you can't hand over control of your business, not control, but management of your business, and expect there's going to be zero mistakes. So I think that's where we need to start. We need to start that this process isn't going to be perfect, that everyone isn't going to make the perfectly right decision every single time, that things are going to break and things are going to go wrong. But it's those situations create opportunities to tighten systems, to maybe improve training and guidance, to put in place sort of coaching regimes, for example, so that you give people greater exposure to those decision-making situations, but while you're around and also while you're away. And also, you've got to think about it from a team member's perspective. If you're going to hold the reins to this business and micromanage every decision-making sort of point, it doesn't leave much room for the team members to grow within that business, to gain greater experience and exposure to some of these things. So it's a good way to, transition your business and, sort of plan for the future from that perspective as well. So I think business owners, as I said, sometimes their own worst enemy, and they're always on the phone or checking emails, and I've been certainly guilty of this. But I think at the end of the day, if you're going to test this sabbatical thing, you've really got to make a commitment to it and say, look, I trust and empower you. I put everything in place. If something absolutely turns to disaster, absolutely, email me or call me or text me. But other than that, let the business go and let that test run out. And I think it'll be the best thing that you've ever tried, because when you build a business that doesn't solely rely on you, that is able then to give you a break so you can go on a holiday and not actually be disturbed for 3 or 4 weeks, it means that you're going to be able to be in a position to come back and be your best self. There's that saying, if you're given a day to chop a tree down, you spend the first 5 hours sharpening the axe. It's the same thing. You need that rest. But also the valuation of the business improves. Risk reduces because it's not just relying upon you, and you tend to have a more robust, often more profitable and more enjoyable business in the long run. Okay, we'll leave it there until next week. Bye for now.